Hello fellow investor, I want to welcome you to this channel. In this video we look at the earnings expectations for J&J. J&J is scheduled to report second quarter earnings on Wednesday, July 16th before the market open. We'll cover several topics to see how J&J is trading going into the earnings and help set expectations moving forward. We will review the current price chart and trend charts along with some key valuation metrics. I'll also share J&J portfolio holdings and performance. Let's get started. I first entered J&J in July of 2023 and have added shares 17 times since that point. I have not sold any positions. My average cost per share is $157.27. At the time of this recording, the share appreciation is only 0.3%. Dividends have contributed 4%, and options have added another 0.9% for a total return of 5.1%. 10 entry points are profitable, with 7 in the red at the moment. The gain-loss ratio for the 17 entry points is 2.36 to 1, meaning I've made $2.36 for every $1 that I've lost. The win rate is 59%. In the previous quarter, J&J reported revenue of $21.89 billion, beating revenue estimates by $331.26 million. J&J reported earnings of $2.77 per share, beating estimates by 19 cents per share. For this quarter, the revenue estimate is $22.87 billion, with earnings of $2.68 per share. Over the last 90 days, 3 analysts raised estimates and 11 analysts lowered estimates. J&J meets or beats analysts' one-year forward estimates 91% of the time. J&J is showing positive relative strength going into the earnings. The options market is pricing an implied move of 3.1%. Let's look at the price chart for J&J. We can see over the last 2 or 3 months it's pretty much been trading sideways in a range. On April the 15th, when they reported, the initial response was down by about 0.5% or so. 1 week later, it was up 2.2%, and 2 weeks later, it had dropped back down to a 1% gain following the earnings. And at that particular point, it was in negative RSI territory, and the MACD was negative. We're currently trading with the positive RSI. However, it is decreasing, but it's sitting at a level of 53.77, which is above the midpoint of 50. The PPO is positive. Doesn't have any strong momentum, but it is positive at the moment. That's a good sign. It is underperforming the SPY currently using the RRG indicator. The momentum is slightly above the midpoint of 100, so it's slightly outperforming as far as momentum. It is outperforming the SPX. I do see positive accumulation. However, the money flow at this particular point is floundering right around the zero line. It doesn't really show a bullish or bearish situation as far as money flow. We can see that the Johnson & Johnson has underperformed the SPY over the last year by 4.29%. It's outperformed its sector, the healthcare sector, by 15.5%. It has outperformed the pharmaceutical industry by 23.35%, but the industry overall is underperforming the SPX. So overall, Johnson & Johnson is showing some positive strength, relative strength, and positive momentum. We'll see how that plays out following the announcements next week. When we switch to the Johnson & Johnson trend chart, which has weekly data for 5 years, we can see that Johnson & Johnson is outperforming its longer term averages slightly. It's underperforming, for the most part, its medium term averages, although it is positive at the moment, trading slightly above those medium term averages. And we are above the short term averages as well, but that seems to be getting closer to those shorter term averages. We'll switch our attention to the valuation growth and profitability metrics from Seeking Alpha. For the forward PE, J&J is trading at 14.84 times, and the sector is trading at 17.83 times. So J&J is a little bit lower than the sector overall. As far as growth, the expected EPS growth rate is 3.39 for Johnson & Johnson compared to the sector of 8.47. The expected growth is 3.77 for J&J compared to the sector at 7.99. Then when we look at net margins, Johnson & Johnson is much more profitable than the sector overall, with a net margin of 24.41 compared to the sector at -2. Finally, we will turn our attention to fast graphs for valuation. Johnson & Johnson is currently trading at fair value as is calculated by fast graph. Fair value is calculated to be 15 times. Over this 13-year time frame, Johnson & Johnson has had an adjusted operating earnings growth rate of 5.48%. Its normal PE ratio is 17.07. So it is trading below its normal market multiple. Looks like it's pretty good value at this particular point. And picking it up when it's trading below its fair value seems to be a pretty good opportunity to pick up Johnson & Johnson. If we look at the fast facts, we can see that they trade at a blended PE of 15.29. They have an EPS yield of 6.54%, indicating good value. And the dividend yield is 3.30%. So if we look at the expectations over the next year and a half or so, between now and December of 2026, if it continues to trade at its fair value ratio, we could expect a total rate of return of around 10.79%, 7.19% annualized. If we trade it up to its normal multiple, then we would expect a 25.37% total rate of return, or 16.56% annualized. If you find these earnings previews helpful, I would appreciate you subscribing to the channel so you are alerted to future videos as they get posted. I would also be grateful if you like the video to help support this channel. I wish you the best in your investment journey and remember to trade well.